Am I audible?
Hello.
Am I audible, sir?
Yeah, yeah.
Hello, and good morning, everyone. Welcome to Cracking the Code, Breaking the Enigma of Tax Laws, hosted by the Society of Finance, Economy, and Business IIT Bhubaneswar. I'm GVS Bhargav, and I'm delighted to welcome you to this insightful journey into the intricacies of income tax laws. Today, for this session, we have been guided by two chartered accountants, Ayush Gupta and Aditya Goel, sir. They bring a wealth of expertise and experience to help us understand the complexities of income tax laws. Ayush Gupta, sir, is a senior audit consultant at Grant Thornton Bharat LLP, delivering financial reporting insights, and is also an ACCA candidate pursuing a professional degree in accounting and finance. And Aditya Goel, sir, has an experience working as a consultant for Grant Thornton Bharat LLP, audit executive at Bansal and Co LLP, and the head of finance and accounting at Digital Labor Job. In the next few hours, we'll delve into the tax code deductions, basic investing, company switching, and review for placements. So, without further any delay, let's embark on this journey of cracking the code with Ayush Gupta and Aditya Golsa, brought to you by FEBS IIT Bhubaneswar. Thank you.
Thank you, sir, for a brief introduction of both of us. So, so guys, starting the session beforehand, I just have one small request from all of you. I want this session to be interactive, not, I want it to be two-way communication. Instead, just we are talking and you guys just listening. So it will be very fruitful for to you guys as well. If you have any queries, any questions during the session, you can just raise your hand and we will try to resolve the query immediately, or we will get back to you. So I think brief introduction has already been done. Just so few more things about me. I've been associated with Grant Thornton in assurance department. Basically, we are doing audits of the companies, and I'm also having experience in taxation as well. And talking about Aditya as well. So I've been a consultant at Grant Thornton. Plus I have had two startups earlier and also headed the one of the startup called Digital Labor Job, which has raised funding of approximately 2 crores from venture capital and angel investor. So there I contributed assisted them in finance and accounting and acquisition of shareholding or share funding basically. So yeah, this is my brief introduction. So yeah, I think now we'll present our screen, so then we can start now. Meanwhile, if you have any questions in between, you can just raise your hand and we'll try to answer. So screen is visible, right? Arush, Saurabh?
Yes, sir. Perfect.
Yes, sir.
Okay,
The screen is
great.
clearly visible.
Okay, great, wonderful. So before starting the session, these are the few points which we are covering under taxation lag. So we have divided the session in two parts. First one is more towards the taxation, and the second one is about general topics related to finance, which I found would be helpful to you guys as well. So in taxation lag, we will be covering a basic introduction, then about some briefing about the PAN card and its usability and requirement. Then there are multiple types of return in income tax, and relevant return we have mentioned in our PPT. And there are some benefits as well for filing income tax returns that we have also covered. And then there is one more question uh, about new versus old tax regime, which one should one consider? Then there are some deductions which income tax department provide to us. We will also be covering that, and there are a few forms which will be helpful to you guys before getting into any profession or any employment contract. And the last part will be how to calculate a tax. A simple we will be present some simple Excel sheet to you guys, in which we have taken one example regarding how one can calculate their own tax. So I think this is the brief introduction about taxation. So income tax is quite simple. There, it is basically a direct tax which is calculated every year to every individual who is incurring earning revenue or earning income is liable to tax. And in income tax, it is basically divided into five heads. Uh, in under income tax law, income is has a very broad and inclusive meaning. So that's why they have to make it a little simpler and easy to administer. The department is divided the income into five major parts. First one is income from salary. That would mainly cover your employment salary you receive from your employer, the wages, the bonus as well, and the commission you get from your employer. Then the other thing is income from house property. So for example, if you own a house at in any location in India, and whatever the rental income you will get from the house property, that will be covered under income from house property. Then the third part is your profit and gains from business or profession. So all types of businesses or profession. So if someone is a chartered accountant and have its own practice, then he will be covered under profit or gains under business profession. And if someone has a general shop, not just big businesses, but general proprietorship shop as well will be covered under profit and gains of business and profession. Then we have capital gains. So for example, if you sell your gold, assets like gold, stocks, bonds, property will be covered. The gain you will receive will be covered under capital gains. And the last part is income from other sources. So all those income which will not be covered under above four heads will be covered under income from other sources. So mainly it covers like lottery, winning, gifts from relatives, gifts from employer. Gifts from employer will be covered under income from salary, but apart from other gifts that you receive from your uh, distant relatives will be covered under income from other sources. So good example of income from other sources will be if you heard about Kaun Banega Crorepati, right? So the all the money which the participant earn from KBC will be taxed under income from other sources. I think we are good so far. If anyone have any query related to the heads, they can raise it.
Does anyone has any query? So and so that we can continue.
I think we can continue, right? So in income tax act, there are mainly there are many multiple persons are there. Like for example, company, individual, Hindu undivided families, association of persons, body of individual, firms, LLPs. All those are covered as type of person. So for example, if you are a salaried person, you will be covered as individual, right? And then we have one more concept, one more basic concept, assessment year versus previous year. So assessment year is nothing but the year in which your income will be assessed. For example, for if we take an example of this current year, so financial year starting from 1st April 22 till 31st March 23 will be your previous year, and its income will be assessed in next year. So previous year will be your 1st April 22 till 31st March 23, and your assessment year will be next year. That is 1st April 23. Afterward, 31st March 23, it will be 23-24. Right? This is little confusing in the beginning, but if you comprehend in a simpler manner, just to explain it once again, uh, your income for the current year will be assessed in next year. So that's why we call it assessment year, right?
Any queries up till now? Guys? Yeah. Yeah, so Saurabh, you have, I think, has any query, no?
No, not till now. Sorry.
Okay, great. Then after these few basic concepts, let's hop on to the next part. So it's about PAN. I think all of you must be having PAN, or is it? How many of you have PAN right now? PAN card. Okay.
I think most of the persons are having PAN. Great. Yeah, almost all of the students are having PAN, apart from someone, some person. Yeah.
Okay, great, great. I think half strength already have the pen.
No worries, we'll be covering now how to apply the PAN if you don't have. So by the end of this session, you'll be knowing how to apply PAN, and what is the purpose.
Right. So PAN card is a very basic requirement. PAN card is like your legal identity. PAN card simply means permanent account number, and it is necessary to have a PAN card if you want to file your return, and it has multiple benefits and use requirements as well. So as small as opening a bank account required PAN card, getting a debit card on credit card application, or even applying for loan, PAN card is required, and it also help in filing your tax return. And ensure compliance with taxation law. Also, it serves as a valid identity proof for individuals and entities in India. And plus, if you want to invest in stocks and in mutual funds or stock market, or even buying and selling properties, PAN card is must. So it's a and applying for PAN card is a very easy process now. I think it will take you roughly 10 minutes, and no physical documents are required. Talking about the steps involved for obtaining a PAN card, it's roughly 7 to 8 step process. You just have to visit NSDL, and whereby you need to go for the option 49A, which is for Indian citizen, right? Then you will choose your category. In our cases, it's individual. As I mentioned, we are not in any business or any company, or not a trust or association or person like these person. We are individuals, so our category would be individual. Then there is some basic requirement about your name, your parents, your communication address, your correspondence address, and then you can digitally submit it through e-sign. So if you all, I hope all are having Aadhaar card. So for if you have Aadhaar card and it is linked with your mobile number, you can digitally sign your PAN card. And one important thing to consider is opt for physical PAN card. And then you can make online payment. And for lastly, you can authenticate it via online via Aadhaar. So it's just a 10-minute process. No physical documents are required. And I think only 2, 3 documents are required. First, your Aadhaar card, your identity, your passport size photo, and some, I think, for communication, your communication address. I think electricity bill would be suffice. So if you are since you have been opting for digital option, no physical documents are required, and over your communication email address, you will receive your PAN allotment within few hours. I think within 2 to 3 hours, you will get your e-PAN over your mail ID, email address, and physical PAN will be delivered within 2 weeks. So I hope all of you will be get your PAN card. It's a very basic document, and it will be very helpful even if you want to build your credit score. That will be required PAN card as well. So for all the basic financial transaction, PAN card is must.
Just one more thing, I need to clarify that. So apart from requirements like opening a bank account requires a PAN card, or dealing in shares, so apart from this, if you have an income of 2.5 lakh or above per annum, then you must be requiring a PAN card, no? Because once you exceed that limit of 2.5 lakhs per annum, then you are mandatory required to file an income tax return. So make sure that if you have been earning 2.5 lakh by any means, then you should get your PAN card and ready to file an income tax return. Do anyone has a question till now?
Bhaiya, is it illegal to not having PAN card? Like if my grandfather, who is like very old, he has no source
Mhm.
of income. So is it
Mhm.
necessary to make his PAN card, or we can ignore?
No, if he is not earning any income, and I think he must be a super senior citizen. So in income tax, we have divided the individual in 3 categories. Till 60 years of age, we are normal citizen. From 60 to 80, it's senior citizen, and after 80, it's super senior citizen. And if you are not earning any income, it is not illegal to not have a PAN.
So is your grandfather has any income, or and they don't have any income?
if he had in his times he had a shop, like
Mm-hmm.
not
Right.
registered or anything, just a small
Mm-hmm.
shop. Now he's
Mm-hmm.
has no. So is it necessary or we can
Yeah,
ignore?
matlab that there comes a two thing na. They, as you have mentioned that he was owning a small shop, then he must be dealing in cash now. So if bank is not government is not able to trace your transactions in a through a bank account na, then I think it will not be required to have a PAN card na. Other than that, it is required. I think you can ignore also if he's and he's a senior citizen, so you can ignore.
Okay, thank you.
Uh, so if
Yeah,
he has no income currently and he must be owning shop a few years back. So I don't think now it will be required. Okay.
yeah. Any other one? Any other person has any question?
Yeah,
Otherwise, we
can you
can.
please explain a little bit more about what is a income tax return?
Yeah, yeah. We'll covering in further slides. So just hold on to that. So you'll
Yeah,
get to know
okay.
what is income tax return. No?
Yeah, sure.
Any other doubt? Yeah, Priya. I think Priya has raised a hand.
Good evening, sir.
Yeah. Good
Yeah.
evening.
Hi, Priya.
So you said that assessment year is immediately the year which is following previous year.
Right.
So, sir, does this happen anytime that both the years are same if the tax is calculated in the same year when it is earned?
Okay. Okay. I got it. So Priya, the thing is in Indian income tax code, in Indian income tax regime, for first we earn our income and it will be assessed in the later part. So for example, for the whole year, let's take one example of the current year. So currently we are in financial year 23-24, right? So we are in 23-24. So whatever income we will be earning in 23-24, we will assess the income after 31st March 24, after the closing of this year, right? So we won't be know ki how much gonna be we be earn. Yeah. So we will wait till 31st March 24, 31st March of relevant any financial year. Then we will assess our income. By assessing, I mean we calculate how much total income we have earned under different heads. The five heads I have talked about: salary, business profession, capital gains, other sources, house property. So whatever the heads we have covered and whatever the total income we have earned, then we will tax assess them, how much we have earned, and accordingly, based on the different scenarios, different tax rates, we will tax them and pay the tax, right?
Yes,
I
sir.
think yeah. I think you have understood, right?
Yes, sir.
Mhm.
Okay, great.
Any other person has any doubt? Okay, I think no one has raised the hand, so I think we can continue. So right, we'll be continuing with the slides. So next is income tax return. So in under income, so we'll be covering two types of return. There are multiple types of return under income tax law in India. So, but for an individual like you and me, so there are two types of return that are 90 more generally applicable. So first is ITR one, that is also called as Sahaj. So this return will be applicable for resident. Resident here I mean a person who is residing in India for 180 days or more. Then he'll be called a resident under Income Tax Act. So, this return is applicable for a resident individual having total income of up to 50 lakh. Here, total income means salary. I think we may have an income through salary, or we may have rental income through house property, or other sources of income like interest, or we may have dividend income or family pension. We might be getting. Plus, there are also chances of agriculture income up to 5,000. So if anyone has any of the following mentioned income, uh, in their houses, so they have to file a ITR 1 Sahaj. Make sure that total income is up to 50 lakh, then only ITR 1 will be applicable. So yeah, and ITR 2, in case of ITR 2 will be applicable for individual and Hindu undivided family. जो कि एलिजिबल नहीं है ITR 1, दैट मीन्स कि 50 लाख से आपकी इनकम ज्यादा है एंड और आपकी इनकम अगर PGPP में नहीं है तो आपको ITR 2 फाइल करनी रहेगी ना. So ठीक है, and apart from that there are exceptions under which you cannot file ITR 1 where a person like you and me is a director in a company, yeah, or has held any unlisted shares at any time during the previous year, or any assets who like house property or anything located outside India, या फिर any has income from any source outside India, or who has any brought forward loss or loss to be carried forward under income any that here I mean that if you are having loss in earlier years through capital gain while selling shares at loss, then you might have a loss there. So if you have been brought forwarding that loss in current year, then you cannot file ITR 1.
So just to add few more points regarding type of returns. ITR 1 is the easiest one and it's pretty straightforward. And most of the details in ITR 1 gets auto populated by the PAN card you have provided. So for example, whenever you get into any employment, you serve their PAN to the employer, right? And whatever the TDS they deduct from you, it will be auto populated in the ITR 1. So ITR 1 is the very straightforward return and it will take hardly 10 to 15 minutes to fill the ITR 1.
Considering if you have a salary income, just because you'll be getting all the details auto populated under income tax portal from your from the details that your employer has filed for you na, in their returns. So it will be easy for you to file income tax ITR 1 in just 10 minutes if you have all the details, auto populated. So do anyone has any questions up till now? Hello, any questions up till now?
Sir, what is income tax return?
Income tax return is basically a summary of entire income that a person or any company or any other person that Ayush has talked about has earned during the year. Then a person or that person has to report that summary to the government. Then that summary is called income tax return. Na? So I think this is a very brief about what is income tax return. So you have to every year, if you are earning or having any loss also, then you have to report that summary of earnings or as well as losses to the government through income tax portal. And the due date will be covering, but for us the individual, the due date will be by 31st July. So if I talk about financial year 23-24, then we have to report everything related to our income plus losses by 31st July 2024.
So simply speaking, income tax return is kind of a document which has a summary details of whatever the income you have earned in the financial year, right?
Have you understood?
Yeah.
Okay. Any other question?
Okay, then let's continue.
I think we can continue here. So apart from the basic limit that I've mentioned, that if you are earning 2.5 lakh per annum, then you have to mandatorily file an income tax return. But let's say if a person doesn't earn 2.5 lakh per annum, then whether he has to file income tax return in that case also, the answer is yes. But there are some conditions. So first is if you have deposited in one or more current accounts of amount 1 crore in a full in a financial year 23, let's say financial year 23-24, then you have to mandatorily file an income tax return. The second is if you have a traveling expenditure to any other country of 2 lakh or more, then you have to file an income tax return. The third is if you have a total bill, electricity bill during the year of 1 lakh or more, then you have to mandatory file an income tax return. Plus, there are some other things also, like a business turnover exceeds 60 lakh, plus professional receipts. If you're a profession like IIT profession or any MBA professional or CA, then if your professional receipts exceed 10 lakh or more during the year, then you have to mandatorily file an income tax return. Plus, there are some concept in income tax return like TDS and TCS. TCS is when you purchase a car, then you have to, I think you must be remembering that you are being asked a TCS. So if you are paying that TCS of 25,000 or more, then you have to mandatorily file income tax return. So these are some of the criteria. Then in these cases, then even if you are not earning 2.5 lakh or more in a financial year, in the following cases, you have to mandatorily file an income tax return. Any questions?
So in crisp
Sir,
note, yes, Priya.
sir, what is TDS?
Yeah, we will cover TDS, brief about TDS in the later on slides.
Okay, sir.
Apart from that, any questions?
Sir, what
Yeah.
happens when a person fails to file income tax return?
So if a person fails to file income tax return, so there are some conditions that, let's say if you have an income of up to 5 lakh, then you will be penalized up to 1,000 rupees. And if you have a total income of 5 lakh or more, then you will be penalized up to 10,000 for not filing income tax return. Plus, there are also disadvantages, like you will not be allowed to claim losses that you have been incurring in past. Plus, they'll be getting difficulties in obtaining loans. Plus, there are also some disadvantages that you will be having if you don't file income tax return.
Okay, thank you.
Yeah, Ashmita, I think Ashmita has also raised her hand.
Yeah, my question was there are some components in the salary like that we get from employer. Like some are taxable, some are non-taxable components, I believe. Is
Right,
there
right.
something involved in that? Can you just explain that, like what it is,
Yeah,
what comes
I
under
think
non-taxable?
we'll be covering that entire salary structure in detail in further slides. So you meanwhile in that slide you can ask your questions. No?
Okay, sure. Yeah,
Yeah.
thank you.
I think we should continue. Then there are few benefits as well for filing income tax return. So if the individual has zero income, he or she is not required to file income tax return. But if you are earning more than the exception limit, the current exception limit is 2.5 lakhs. So if you are earning more than the basic exemption limit, you need to file the income tax return, which comes with few benefits as well.
So one is it acts as a legal document. You can say that income tax proof as income proof plus identity proof. Plus, it will be beneficial, mandatory documents for applying loans. Bank generally ask for, last 3 years return while assessing your, past and current financial situation and whether you will be able to pay the loan or not. So you must be requiring that, ITR. Next is it helps in claiming deductions. So yeah, you can claim various types of deductions under income tax. So by that you will be yeah, having a less you'll be able to pay less tax on your entire income if you claim the deductions. Plus it helps in planning to go abroad. uh, because while if you go abroad, there is a idea. If you don't file an ITR, it can deteriorate your plans to go abroad. ITR, like one of the most important document in the list that are required by countries that you want to visit. And plus, if you don't file an income tax return, you'll be penalized plus punished also under Income Tax Act. If and plus also, as I've talked about, losses cannot be carried forward that you have been incurring in the past.
So as we have mentioned, you necessarily need to mention your losses as well in the income tax return, because for example in the first year you incur loss of 2 lakhs rupees, right? And in the next year you earn income of 15 lakhs 15 lakh rupees. So if you had filed the return of previous year in which you have incurred loss, in the next year when you are earning income of 15 lakhs, you will be taxed only for 13 lakhs. That is the difference of 2 lakhs. In simpler terms, that is the case when we are talking about losses can be carried forward. So if you have not filed the return, you won't be able to carry forward those loss, and you then in the next year you will be taxed for whole amount, the 15 lakhs. So it's always better to file the income tax return on time,
Right.
because it comes with multiple benefits as well. Great.
Any questions in between?
So now coming towards the next part. So guys, if you have any query, you can raise in between. You can just unmute and you can raise the query. And then we are talking about the new versus old tax regime. So right now we are only covering the tax rates for the individuals, right? So there are multiple slabs in income tax, and new tax regime has been came into force. It's a quite recent amendment, and so we have the option in whatever scheme, in whatever regime we can opt for, old tax regime versus new tax regime. Right, so these are the few mentioned, these below mentioned are the rates which are applicable for the individual who is a resident or non-resident, but up to 60 years of age. These are the rates applicable for in case of old tax regime, up to 2.5 lakh, you don't have to pay any tax. Then from 2.5 lakh till 5 lakh, 5% will be the tax rate. So 2.5 lakh into 5%, that will be your tax. From 5 lakh to 10 lakh, the rate will be 12,500. That is 5% of 2.5 lakh plus 20% above 5 lakh. And for above 10 lakh, it's a flat tax rate of 30%. Similarly, in new tax regime as well, there is a multiple slabs. So for example, if you are earning income of 10 lakh rupees, so you will be fall under, first you have to pay 5% of 2.5 lakh, that is 12,500. Then you have to only pay 5 lakh into 20%, that is 1 lakh. So your tax will be 1.12500, 1.12 lakhs. Similarly, in new tax regime, the slab rates are different. So what is the difference between old tax and new tax? Is it that for new tax regime, you will not have the deductions that came in Income Tax Act. There are multiple deductions are there, through which there are multiple benefits as well, through which you can reduce your total income and resulting in limited tax. So that is the main difference between old tax regime and new tax regime. So this is are the differences. So the apart from the tax rates that we have mentioned here, there are few rate cess as well. That is health and education cess, which is same in both the tax regime, and the health and education cess is around 4%. That is the total income into 4% you have to pay extra. That is health and education cess. Then there are other in case of other rates that we have talked about, capital gains. So LTCG is taxed differently, and STCG is taxed differently. So the salary you will be earning, that will be taxable in this manner, in this slab. But if, for example, if you have sold any property or you have sold any jewelry, and if it's a long, you are holding it for long term, for more than 1 year is long term, and for less than 1 year it's short term. So if you're holding it for long term, then you will be taxed for flat at 20%. And similarly, if it is for less than 1 year, then you will be taxed for 15% of the gain amount you have received. Right, so the due date we have already mentioned, it's 31st July in case of individual. Different person have different due dates, but for individual it's 31st July of the assessment year. Like for example, income tax return for the financial year 1st April 22 till 31st March 23 will be filed on or before 31st July 23. Great.
Any questions up till now?
What is meant by gain of selling a property or gold?
So Karthik, for example, you have one house property, in Mumbai and you have bought it for around 50 lakhs, right? And within 3 months you sold it for 60 lakhs. So 60 lakhs minus 50 lakhs will be 10 lakhs is your short term capital gain, right? This is your gain. So whatever the asset you hold, if you sell it, you will be taxed under capital gains. Is it clear now?
Does it take into account of the inflation of the?
Yes, it will take into account inflation as well. It's a whole complete calculation involved. But in simpler terms, it is a difference between the selling price minus cost price.
Cost price is inflated. Let's say if you have bought in 2001, so it will have it will have a formula that considers the impact of inflation in the purchase cost. So that inflated amount will be deducted from your entire sold amount. So net amount will be your gain, and on that net amount you have to pay tax at the earlier mentioned figure rates that Ayush has talked about.
Yes,
Aditya, you have anything question?
So just like continuing on the question, like let's say I inherit a property. So then what will be the cost price taken as?
So in case of if you inherit the property, it will be the when your dad or your ancestor have bought the property. So for example, if your dad have purchased the property even in 1970s or 80s or 90s, then that cost price will be considered adjusted with inflation.
Okay, sir. Thank you.
Any other questions?
Yeah, Siddharth.
Sir, in previous slide, you have written some, there was mentioned like 10% above, 20% above in that tax, old tax regime and new tax regime.
Right.
Can you show that?
Sure.
There was written 10% above.
Right.
So what is the query here?
Sir, here is written like in old tax regime, 5 lakh 1 rupee to 10 lakh. Here it written 12,500 plus 20% above 5 lakh, and here it is not. What does that mean? 20% above 5 lakh.
That means if your salary or your entire income in the financial year is between 5 lakh to 10 lakh, then your tax amount will be 12,500 plus 20% above 5 lakh. Let's say I have an income of 7 lakh.
Okay.
So up to 5 lakh, I'll be having a tax of 12,500. Then above 5 lakh, that means 2 lakh. 2 lakh into 20%, that means 40,000. So entire amount will be 52,500. So this is a tax. This is the method, slab rate method that income tax specifies about on calculation of tax under in India.
Okay, sir.
Okay, great.
Any other down? I think Siddharth and Ashmita.
Ashmita, right.
Yeah. So can you just mention the difference between the old regime and the new regime? You said that there was some benefit that we got in the new regime of the calculation, like for the income
So
tax.
Ashmita, if you consider it carefully, the tax slabs are different. So at a glance, you will find that new tax regime is a better option because they have multiple slabs. So in all tax regime, after 10 lakh, it is getting a flat 30%, right? But in new tax regime, the tax rate, there are multiple slabs. So if you calculate by new tax regime, you will get a lesser tax amount. However, in old tax regime, there are multiple benefits. Deductions are there. So for example, if you purchase insurance, life insurance, you will get a deduction in old tax regime. However, you won't get such deduction in new tax regime. We will cover those deductions and benefits which are there in old tax regime, which are not there in new tax regime in the later slide.
But to just remember on a brief note that we recommend you that old tax is more beneficial, not from slab perspective, but there are multiple deductions that that you are allowed to claim under old tax regime that are not there in new tax regime. So by that you will be having a less tax under old tax regime versus new tax regime.
We will show you the calculation. You will get a better idea. We will present one Excel as well, where we have calculated according to old tax regime as well and new tax regime as well.
Right.
In that way, you will get a better idea.
Any other questions?
Yeah, just to continue on that, is there a why we are discussing this? Is it possible for us to claim according to the old regime or something, or is
Yeah,
it just
right,
something that we
right. You have
okay,
the option. You can either choose old tax regime or new tax regime.
So your employer
okay,
will be asking you to whether opt for new or old, and later on you can also change that option if you have said.
So next part is these are the deductions that are available, which are available in old tax regime. So if you opt for old tax regime, then you will be able to get these deductions. So there are few deductions that we have covered. This is not an exhaustive list, but we have covered the main deductions only, which will be relevant to you.
That will be relevant to you. So first is in left we have mentioned the sections. So 80C, there is section 1, section 80C. Under this you can claim you are allowed to claim a deduction for a life insurance premium, provident fund that you have been paying, any subscription to equity shares, or you have been paying any tuition fees of your children. Plus there are national savings certificate that government issue. If you have been investing in that, then you are allowed to claim a deductions. Plus, if you have any taken any housing loan, then on that repayment also, principal repayment, you are allowed to claim a deductions. So next is 80CCC. So in this, if you are opting for pension scheme through LIC or any other insurer, then you are allowed to claim that premium amount under 80CCC. Next is 80CCD1. So if you have been opting for national pension scheme of central government, then you must be paying any premium under this. For that premium amount, you are allowed to claim a deduction. Make sure that just remember that 80C, 80CCC, 80CCD, these three sections have a combined limit of 1.5 lakh. So you are allowed to claim entire spend amount up to 1.5 lakh under income tax act. Uh, so yeah, so next is section 80 CCD 1B. So apart from that, you have been investing in a national pension scheme. Let's say you have been investing in 70,000. So you can claim 20,000 in these limit and rest of 50,000 in 80 CCD 1B. So this is the additional 50,000 that the government is allowing to claim in your income tax returns. So next is 80D. 80D is just a health insurance that everyone takes, plus preventive health checkups that person regularly goes to doctor. That slips or that bills are also allowed to get claimed as a deductions. So these limit is 50,000.
So if you take a health insurance, and whatever the premium you pay, for example, if you take one health insurance for yourself or for even for your parents as well, and that premium amount is 80,000, so up to 50,000 you can deduct it from your self income. So for example, if you're earning 10 lakhs and you have invested in life insurance premium or tuition fee and whatever the deduction, so you will be able to get the deduction up to 1.5 lakh in the above three section. Then if you have also have the health insurance as well and you have paid premium to the health insurer, then you will get again you will get the 50,000 deduction as well. So in a way your tax liability will be reduced.
So these are separate. No? So you can claim in all the sections, provided you have opted for national pension scheme or health insurance premium. You can avail all the sections benefit under income tax, right? Next is 80E section. So it is towards a interest payment on loan that you have taken for higher education of self or either relative. So that interest payment that you have been paying on loan will be allowed as a deductions. And the next is 80EEB. So if you have purchased a e-vehicle and has taken a loan during the period April 2019 to 31st March 2023, then you are allowed to get a deductions of those interest payment on loan taken for purchase of electric vehicle. So deduction limit is 1.5 lakh, and it is every year. And next is 80 TTA. So interest that is being received on savings account of you and persons like me account, and so will be allowed to get a deductions of 10,000 on those interests. Next is 80GGC. So if you have been making any payment to political party or electoral trust, then that payment is also allowed as deduction. It is 100% allowed. Plus, there is one more section 80G. So if you have been making any donations to prescribed fund or charitable institutions, so that payment is also allowed, provided you have been making payment through bank account. Cash payment is not allowed exceeding 2000. So in these sections, every year you can take a benefit of these section up to the limits that have been mentioned in these slides. So, and does anyone has questions up till now?
Can you
So
explain the concept of deduction? So when you say deduction, like if I understand, like from what I understand is it that like the amount that is being taxed from our salary, if you're paying something, like we're paying for a medical life insurance or on a fund or a scheme. So when we are saying that we are claiming for deduction, is that like that amount of tax that we are paying on that amount is what we are getting as return? Is that my
No,
understanding correct?
no,
Like, or is it
no,
something
no,
different?
no. So let's assume you have been earning 9 lakh, 10 lakh for in a financial year, an entire financial year, and you have opted for a health insurance or life insurance or any tuition fees you have paid or anything like that, na? So that deduction, that entire payment is amount is, let's say amount is 2 lakh. So you have been earning 10 lakh minus 2 lakh, and 8 lakh will be your taxable income on which you have to pay tax to the government
according to the slabs that we have
according to
mentioned.
slabs that Ayush has talked about. Na? So I think this is a meaning, your total income gets reduced by the deductions amount that we have talked about. Accordingly, you are allowed to pay tax on the lower side of income. Yeah. So this is a brief, I think, about deductions.
Yeah, got it. Thank you.
Okay. Any other questions?
So I think we should continue. So there are 3-4 types of forms as well available, which are relevant to you. One is form 12BB. So whatever the deduction that, for example, you have paid your insurance premium. Ideally, you should be getting the deduction for it, but your employer won't be know that you have paid the premium. So form 12BB is simply the intimation to the employer that I have purchased any insurance, I have made any investment. So all those details will be mentioned in form 12BA. Then we have form 16 as well. Form 16 is something that the which have the details about the TDS that your employer has deducted for against your PAN. So whatever the deduction the employer has made will be presented under form 16. Then we have form 26 AS as well. It is like it will be have details of tax deducted and collected at source. And the last one is annual information system. It's like a complete report which you can get from income tax portal, which will have all your details, including tax deductions, the taxes you have paid, the demands you have raised from the department for the refund of income tax that you have paid over and above. So these are few types of forms that are relevant for you. Just remember two forms, form 16 and form 26 AS. If you are planning for after completing your graduation, if you are planning for employment, then you just always remember form 16 is the major chunk which will have your income you have earned from the employer so far, and form 26 as well. These are the two major forms relevant for the individual who is earning their income through employment.
So, just to add, Form 16 is a summary of your income that you have earned from the employer plus tax that he has been deducting and during the entire year. So these Form 16 you'll be getting from employer plus Forms 26 years you'll be getting through income tax portal, right? I think we can continue.
So now that the Excel I was talking about, how to one can calculate their tax. So in case of salary individual, calculating tax and filing return is very simple, and most of the data gets auto-populated due to your PAN employer availability. So we have created one small Excel in which we have covered basic things and how it will be calculated and taxed. So for example, there are multiple components in salary. First one is your basic pay. Then you have house house rent allowance, bonuses, special allowance, tenure base. So this is the income. This is accordingly your old regime. This is calculated as per your old regime. This is as per your new regime. So the income will be same 14 lakhs, 14 lakhs, 14 lakhs, right? Then you have in old tax regime, you have house rent allowances, which is nothing but it is a lowest of three things. So if you have paid house rent, then you will that will be your whatever the amount you have received HRA, the 50% of your basic. Like for example, 40 or 50 depends on if you are living in a metropolitan city, then you will get 50% of basic as deduction. And if you are living in other than metropolitan cities, you will get 40% of basic. So in my example, I have taken 50%. So this is 50% of your basic and the rent paid and the whatever the rent you have paid over and above your 10% of basic. So lower of 3 is 136 lakhs, right? So whatever the amount we have calculated, the lowest amount is 1.36 lakh. So this is the amount that you will be deducted from your total income, gross income. This is your gross income. And if you deduct these two, you will get 13 lakhs, 16 lakhs. So you have earned from your employer 14 lakhs. Then you get house rent allowance, which will be deducted. This is an exemption under section 10. And this will reduce your income. So your next income will your income calculated will be 13 lakhs. But however, in new regime, this benefit is not available. So in that case, your income would remain same 14.98 lakhs. Then we have standard deduction of 50,000. It is available for everyone. It will again reduce your amount by 50,000. So again, it will come and it is available in new regime as well. So that's how your gross total income will be calculated. And then you will have your net income. And now you have deductions that we have talked about. The deductions regarding the insurance, if you take insurance, if you invest in national pension scheme, if you take health insurance, life insurance, if you have any education expense, these kind of deductions will be available to you. These exemptions, this deduction will not be available in new regime. So all these columns are blank. However, it is available in old regime. So for example, if you have provident fund, it is mandatory for everyone. And so that's why 49,000. So in our example, it is coming around 49,000. So this will be reduced. Then the person has also taken life insurance of 30,000 rupees. Again, this will be reduced. And they have invested in equity linked savings scheme as well. So equity linked savings scheme is like a kind of mutual fund. So all those deductions will be available, which is coming around 1.99 lakhs. However, as we have mentioned, it is available up to only 1.5 lakhs. So we have taken only 1.50 lakhs. And then you have deduction under different sections as well. ATD, it is related to health insurance. So this is you have paid 61,000. So all these deductions will be reduce your total income, right? So we have started with 14 lakhs, the amount you have earned from your employer. But however, according to all the deductions you receive, your total taxable income coming for around 11 lakhs. However, in new regime, these benefits are not available. So your tax would remain same as 14 lakhs only. Then you have tax computation. So for old regime, this is the number 11 lakhs. And for new regime, it's 14 lakhs. And then we have calculated the tax according to the, so for first 2.5 lakhs, it's 12,500. Then for next 5 lakh to 10 lakh, it's 1 lakh. That is 5 lakh, 20% of 5 lakhs. Then we have 30% of amount above 10 lakhs, right? So it was around only 1 lakh. So that's why it is coming 30,000. So this is your total tax amount in old regime. Similarly, in different tax slabs in new regime, we have considered the different taxes. So it is coming around 1.64 lakhs. And then education size is same for both the regimes. And so the annual tax liability was coming for you around 1.48 lakhs in old regime and 1.7 lakhs in new regime. So by this way, you can project your tax liability according to the income you will be getting in the next year, right? So this was the per month tax that coming in both the regime. So we've taken a pretty simple stimulation. We have taken pretty simple example just to make you understand how tax gets calculated, how we calculate the total taxable income, and how accordingly in new regime and old regime the tax gets calculated. So if you have anyone have any query, I know it's little complicated for you since it's your first time, but if you have any query related to it regarding the computation, you can let us know. Anyone? Any query? Yes, Siddharth.
Sir, if the income tax is filed yearly, so
Right.
if sir, if a person get demotion in any month and its salary get demoted, so how will the departments will the tax be deducted according to that salary? Means
So
if a person
Siddharth,
is getting 1 lakh
Mhm.
in
Right, right.
first month, in second month he is getting 80,000. So how will the department know that that person has got demoted? Because we are annually filing the report.
Yes, Raj. Siddharth. So accordingly, what happens is you project your every month your TDS get deducted by the income tax by the your employer, right? Every month the TDS gets deducted. So for example, for first 6 months you were earning 1 lakh rupees, and accordingly your tax get calculated and per month tax was calculated, right? For the next 6 months, your income get reduced from 1 lakh to 80,000. Then you will be your tax liability will get reduced, right? So in those cases, what happens is whatever the tax, for example, but however your tax get calculated at a bigger number, at a bigger amount, and accordingly it get deposited to the department, right? So in those cases, you claim refund from the department by filing income tax return, right?
Okay, sir.
So whatever that, if you are taxed over and above your actual income, then you can claim refund back your extra amount that you have paid to the department by filing your return. That you can mention there, no, I have earned only 10 lakhs, but it's mentioned 12 lakhs. I have earned only 10 lakhs. Accordingly, I should be taxed, and over and excess amount will be credited back to your savings account, right?
Okay, sir. Okay.
Anyone else?
What does exemption under Section 10 mean?
So exemption under Section 10 is a different exemption. It is apart from the deduction that we have talked about. There are certain exemption available in Section 10, but for individual earning via employment, it's a separately mentioned that if you are, it's kind of a allowance, house rent allowance. HRA means house rent allowance. So department income tax has given one formula to calculate the exemption. Like for example, if you are living in a different city, most of us are living in a different city, we get different job in different cities. So just to less the burden of the taxpayer, the department has introduced human house rent allowance. So in that way, it will reduce your tax amount by reducing your taxable income. So your query regarding the formula, or what is the scenario? What is the concept?
The concept.
The concept is quite similar. It is just there to reduce your taxable liability, tax liability, by reducing your taxable income. So in our case, it was coming around 1.36 lakhs, right? HRA exemption. Exemption and deduction is kind of similar thing. It will just reduce your total tax liability. It's just a different word that department use. Here they use exemption, but in other cases it's deductions. But in both the cases, your total income will be reduced.
Just one more thing I need to mention that, as you have just seen that there are major two, three components. One is gross total income that you should, know. And there is one thing, gross total income plus there is and then comes so I'll go again. So there are five heads. Ayush has talked about salary, house property, other sources, capital gain, and PGPP. So under that head, let's say I take a salary example. So salary under the salary, that head in to reduce that head income, there is one deduction that is called exemption. But to reduce overall head income, there is something called deductions. So if you want to reduce your head income like salary income or a house property income, then to reduce that head income, specifically head income, then that thing is called exemption. Other than that, to reduce my overall total gross income, there comes a thing called deductions. So after that deductions, it comes my net income or total taxable income. I think you have got my point, right? Ashmita, I think you have questions.
Yes, Pranay.
Yeah,
Yes. Yeah,
regarding
Ashmita.
that rent HRA one, you said mentioned the three categories. Like, can you just go over that, like how you calculated those three? I was not sure about that. And you said that the lowest of the
So
three
for
is taken. Yeah.
one thing I think you might have understood that house rent allowances are deductions for your rent payment that you have been paying.
Right, yeah.
Yeah. So Ashmita, it's the department has given one formula to calculate the exemption amount. So they have given one formula, which is whatever the HRA you have received from your employer. Like if you consider here, though, so salary is basically divided into 4 or 5 parts: basic, HRA, DRNS, allowance, bonuses, special allowance. So to calculate the HRA amount, you need to take the lowest of three things. First one is your HRA received. So whatever the HRA you have received from your employer. In our case, it is 2.05 lakhs, right? First one is this one. Then we have 40% or 50% of basic. So your basic is 6.11 lakhs. So 50% of basic is your 3.05 lakhs. And the difference between the two is, if you are living in a metropolitan city, since in metropolitan city rents are higher on the higher side. So if you are in Delhi, Mumbai kind of cities, the rent is anyway higher as compared to cities like Bhopal or Kanpur, right? So if you are living in a metropolitan city, you will get 50% of basic. So it will increase your exemption amount. And if you are living in a non-metropolitan city, it will be your 40% of your basic amount. So in our case, we are assuming that we are in a Delhi or Mumbai. So we have taken 50% of basic. So that's how this lag was calculated. And regarding the rent paid, 10% of basic. This is the part. So you have received HRA of 2.05 lakhs. However, you have only paid rent of 1.98 lakh during the year, right? So 10% of basic is your 61,000. So difference between the two, the rent you have paid, the actual rent you have paid, and the 10% of basic, your basic limit. But the difference of the two is your rent paid 10 over and above 10% of basic, and the
Okay, I'm sorry.
lowest. Yes. Hello. I think we should continue. So the difference
Somebody was
between the
removing me again and again from the meeting, so I just don't appreciate this behavior. I don't know. This is a professional session, so
Finally, Saurabh,
I could not
can-
listen to the answer
Yeah.
as well. I tried to join back like 10 times in the last 50 seconds. So yeah.
Yeah. Sorry for the inconvenience. Let me see.
No, it's fine. Okay.
Just can you mention the part of the 10%
Yeah, sure,
rent
Ashmita.
paid? Like, yeah,
So
because I
the
was
so
trying to join back again and again.
no, it's fine. It's totally fine, Ashmita. Regarding the rent paid over and above 10% of basic. So it is calculated by two parts. First of all, you have paid the rent of 1.98 lakh during the year, right? We are assuming you have paid the rent of total 1.98 lakh, and the 10% of basic. This is a clear formula, that is basic into 10%. So the difference between the two is your this lakh rent paid over and above 10% of basic, and whatever the least amount of it will be eligible for exemption. This is a normal clear cut formula. You don't need to memorize it. You will anyway can get this calculator online, and you just need to mention your details, your basic details, basic HRA, and your, this you can get in your from your salary slips. So if you mention this detail, there are calculators available online as well, and you can get it will auto populate and calculate this for you, right?
Okay, got it. Yeah, thank you.
Okay. Yes, Pranay.
Hi. So my question was about are students who are working as interns, are they also liable to pay tax? And Like what brackets are there for interns?
So if you are an intern, you will tax according to the normal salary individual only. So if you are earning over 2.5 lakhs, you will be required to file return as well, and you will be taxed according to the regime only, old regime or new regime, whatever you choose. So it's like a normal.
All right, thanks.
Aditya?
Sir?
Yes. Yeah.
सर लेट्स से मैंने एक ईवी खरीदी 10 लाख रुपीस की
Okay.
और उसे रीपे करने के लिए मैंने 10 लाख रुपीस का लोन भी लिया
Right.
और वो लोन 4 इयर्स के लिए था, तो उसका जो डिडक्शन है 1.5 लाख का वो 4 इयर्स तक चलेगा या फिर सिर्फ जिस साल खरीदा उस साल?
4 years.
Every
It will be for 4 years.
Every year 4 year till 4 years.
So whatever the interest you pay for every 4 years, you will get the deduction.
Okay, sir.
Yes, Pranay.
I had one more question. So in this example, you showed that the old tax regime was sort of beneficial. It reduced our net taxable income. Are there also cases where the new regime might be more beneficial?
Yeah, definitely. There are cases. There will be cases. So, for example, if you do not invest in any of the deductions, if you won't take any health insurance, if you don't take any provident fund, or if you don't invest in any kind of deductions available, then the new regime would be beneficial to you. So it depends. So the best scenario is the best way is to calculate the tax beforehand and then choose the regime accordingly, whatever the best suits you before filing the final return. So you will get this option when you file the final return.
Right.
So for example, if you are filing the return in 31st July 23, you need to choose whatever regime you want before filing the return, just before 5 minutes before the return. So you can calculate your tax beforehand, then you can choose your regime accordingly.
Right.
All right. And once you choose a regime, do you have to stick with that for the next year?
No,
or
every year you can change. No?
In case of individual, you can change every year.
Okay, got it. Thanks.
Yes, Ashmita.
Yeah, so two questions. First is somebody was asking about if there is a reduction in salary. My question is, what if there was a promotion and there is a change of slab in between the year? Like sometimes it's possible for somebody to get promotion in the between in the middle of a financial year, like in
Appraisal
October,
happens
September.
during mid-year,
Yeah.
right?
So,
So in
how
those
does
scenarios
that
as well,
work?
accordingly, your tax liability will be increased, and for next month onward, your TDS liability will be increased. So in case of salaried individual, your tax every month your tax gets deducted in the form of TDS. That's called tax deposited at source.
Okay.
Right.
Okay.
So what happens is you get your CTC for which is quite same for around the year, right? So on projected basis, employer calculate your tax, then for it and then it divided for 12 months, and accordingly they will deduct it from your salary slip, from your salary. And that deduction you can find it in your salary slip as well. The whatever the TDS amount they have collected, and TDS get collected every month. So for example, if you get a midterm bonus, it will increase your TDS for the next month onward. If you get promotion in the mid-year, your TDS liability will be increased next month onwards.
Okay. So, but then when we will be claiming for the returns, like I'm assuming, is there some difference in the amounts that we can claim based on the slabs, or is it the same all throughout? Like, for example, if I'm in a particular slab of income, like, is that like the amount that you mentioned that is across for all slabs of income, right? Like that 1.5 lakh we can claim for life insurance and pension schemes and all. Not, there is no increase in the amount that we can claim.
No. Deduction is same.
Nothing like that.
Deduction would
Okay.
remain same.
Deductions are,
Okay.
limit specified. So
Yes, Bhargav.
Okay.
Sharad Kumar has a doubt. Are properties like lands?
your voice is,
Bhargav, your
little
voice
slow.
is. Hello. Bhargav, you can write your question in chat box. Yes,
So,
Omvias. Right. Yes, Priya.
sir, like I would like to ask one thing. Like currently, I'm working as an intern, as I'm a second year MBA student. So I'm getting some amount of stipend. So what role does 26 AS plays in that? Like I'm getting some amount of stipend for like I'm doing internship for the 6 months and getting a certain stipend, which will for 6 months it will be like around approximately yeah 30 no, so it will be 1.5 lakh. So sir, how it will affect the 26 AS form? Like will I come under the non-earning member or in the earning member?
So Priya, if you are earning 1.5 lakh for the year, your TDS
No, for
liability will
6 months
for
as in
6 months.
stipend. Yes sir.
Right, for the next, so if until you cross the exemption limit of 2.5 lakhs, you won't be considered as under TDS regime. The tax liability will not be there. So accordingly, TDS will not be deducted. However, from the moment you cross the 2.5 lakhs, you will be required, your tax liability will be there. So accordingly, your TDS will be deducted from your salary or your stipend.
Okay sir.
That TDS will be reflected in your 26 years. So yeah, this is the so role of 26 years is just to reflect your taxes that have been deducted during the year na, by the employer or by any person like company or any whatsoever. So that form shows that TDS deduction amount na.
Okay sir.
Okay, great. Yes, Ashmita.
Yeah, can you talk about EPF and is that something that can be claimed the Employee Provident Fund? I think it's linked to the PAN and what happens if we change employers? Like, do
So
we have to
EPF
get the
is
money out and all?
right. So in case of EPF, if you change your employer during the year, right? For example, you have started one job, you are a fresher and you have started join one company, and your EPF is depend upon your salary, upon your basic whatever the amount you are earning. If you're earning up to that limit, you will be required to you will automatically or mandatorily get enrolled in Employee Provident Fund. And if you in between, if you change your employer, then you need to take care of your UAN number that will be mentioned in your salary slip. Your UN number is like a unique number, just like your Aadhaar number. So if you hop on to the other company, then you need to mention your UN number to the next employer as well, so that you will be continue to get your EPF benefit in under one account only.
Okay, and we do get benefits of EPF,
Yeah,
like in
deduction
case
is
of
there, definitely
deductions
there
and
in
all.
ATC.
Okay, and it's like, is it that I have to, like, if I'm changing employer, do I have to remove the amount that was deposited by the
No,
employer
no, 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 no.
previously?
So
Nothing like that.
so you don't need to remove the amount. It will be deposited under the department of the government only, and it's honestly speaking, it's not even there. You can't just withdraw the amount. It will have tax implications as well. So it's always better to invest it for at least 5 years.
Okay, got it. Thank you.
Yes, Om.
Sir, in the deduction slide, we saw that for charitable trust there is no tax deduction, right? So
Tax deduction, there is a tax deduction if you make a donation to charitable institutions
no, not
like
for
trust.
donation. Not for donation. Oh, is there taxation for donation also?
Charitable trust you are talking about, or
I'm talking that if I'm donating to a charitable trust and carrying out transactions via to charitable trust, then would the taxation would be less as compared to normal company to company, right?
So Om, you are saying you are donating to one charitable trust, or what is the scenario?
Yes, I'm donating to a charitable trust, so deduction hoga, right?
Yeah, you will get the deduction if the trust is registered with the government and with the income tax portal, income tax department as well. So if you are registering donating in a notified charitable trust, then you can claim deduction.
टैक्स कम हो गया, right? टैक्स कम हो
Yeah,
गया.
it will reduce your tax.
तो फिर जो कंपनीज होते हैं वो ऐसे चैरिटेबल ट्रस्ट के थ्रू ही सब ट्रांजैक्शंस क्यों नहीं करते?
It creates other implications as well. It's not that simple. So in case of company, there is a different regime altogether. Right now we are only talking from the point of view of individuals. So for company, there are multiple compliances involved. and they just can't,
It's
donate
just not
every amount to
easy.
the
Yeah.
charitable trust and save their taxes.
Okay, okay.
So income tax department is pretty smart in these cases. They will ensure that everyone is paying taxes.
Yeah.
Okay, sure, sure.
Anyone else? Any question regarding any slide so far?
I think no one has any questions, so we can continue, right?
So,
Priya?
Yeah,
sir,
Priya.
can we get the recording of this session?
I
That
think
you can ask from Saurabh or Ayush.
Okay, sir.
I think it is being recorded, so you may get it from Saurabh or Arushna.
Yes, sir, you will definitely get the recording of this session, so there's no need to worry.
So next is
so far we have talked about the income tax, right? But I think we are already have reached the session time.
Okay,
Already 8:20, I guess. So Saurabh and Ayush, we have covered few points regarding the other parts as well. So I don't think we will be able to cover it within next 10 to 15 minutes. So my suggestion would be we can just, for the timing, we can just take the queries regarding the taxation. And if needed, if you guys organize, we would be happily, came for another session regarding the other points that we were covering. What do you think, Saurabh?
Yeah, sure, we can have that. But if the participants are, enthusiastic still, so
Yeah,
we
sure,
can have
definitely, because
let's stretch
anyway.
this to yeah, we can stretch this to half an hour more. If the
Okay.
participants are okay. Otherwise,
We
we can
can
have
check with the participant. Actually, I am also running late. I only have 20-25 minutes more.
Yeah, sure.
We can continue if
Works.
the participant would like to stay. So we can talk whatever the points we are discussing. If you guys find it interesting, we can have a one, vote for the same. So apart from taxation, we were covering these few points regarding the savings versus investing, building credit score, about demat account. It always a hot topic about stock, shares, mutual funds. So we have also covered demat account, introduction to stock exchange, where we are covering the basic briefing about the Indian stock exchange. What is Nifty? What is Sensex? What is Bombay Stock Exchange? About such thing, and the investment opportunity available as a beginner. Then we are building insurance, about insurance as well. So why one should have an insurance, and what are the type of insurance available for the individual. So these are the few 5-6 points that we have further covered as well. And I think if we stayed on, we can continue, we can cover these points in 20-25 minutes only. So what do you guys think? Should we continue?
Sir, what if
so
we
let's
ask
have
question
a
in
quick.
between?
Yeah, let's have a quick vote. You can just raise your hand if you want to continue.
Right.
Just a quick. Yeah, guys. Yeah, even I am. So yeah.
Fair enough. I think we can cover it.
Yeah.
So yeah, let's continue.
Great. Thank you, sir. Thank you for your time. Yeah.
Yeah, our pleasure, Saurabh, definitely.
First is saving versus investing. So what is the better way to grow your wealth? So we know generally that in India saving is more preferred, but saving so it has benefits plus as well as disadvantages. So we'll be covering a gist of savings versus investing. So savings provide a safety net and offer financial security during emergency and unexpected situations. So here's why savings matter, because there is a better liquidity. When you will be needing any cash in unexpected or emergency situation, you'll have better access to savings. Plus there is a security because there is a less risk that as compared to markets. for the money that you have saved in your bank account. So it will have a better security. Plus, there are short-term goals. Savings does not cover the impact of inflation, so it is generally suitable for short-term financial goals like emergency funds or upcoming situation that you may be planning about. Plus, there's a peace of mind also because in investments, while investing, there is a higher risk. Plus, there is unexpected situation that hampers the mind of an individual. So it offers a peace of mind also. But however, while investing, one investor with the expectation of earning a higher returns, it will help you grow your wealth over time. Uh, Here's some points that's why investing is considered crucial for long-term wealth creation and not savings. So in investing, you'll be having a potential of higher returns, like you'll be investing in different classes of assets like stocks, bonds, real estates, as which generally offers a higher return as compared to traditional savings accounts. It beats inflation as you might be getting a return of around 12% in stocks or bonds instead of 4% in your savings bank account. So it overall beats inflation, and it helps in achieving long-term goals like retirement or purchasing a home. You'll be needing a big chunk of funds. Plus, there is a diversification of your funds investment portfolio, so which can overall hedge your portfolio and offer a better return. So yeah, investing and savings are both complementary strategy that can help grow their investors' wealth safely, and building a funny foundation of saving plus paying off debt and wisely investing in assets. Remember just that key to financial success is patience, discipline, and continuous learning.
So I hope everyone understand when we talk about investing, right? So for example, you get a great job, you are earning 24, you get as a fresher, you will get the job of 24 lakh CTC, right? So what you gonna do about the money? You gonna stay it in your savings account only, or then what you gonna do about it? So investing is all about making money out of money, right? So if you just keep your money in your savings account or you keep your money in your pocket, you won't be able to earn any amount, earn any income from it. And anyway, the inflation is increasing, so it will result in loss to you. So that's why investing plays its role. However, investing comes with some disadvantages as well. I won't say it's a disadvantage, but there are some shortcomings of investing, and that you can also reduce by taking systematic risk, right? So it's always better to be a informed investor and keeping yourself up to date about the investment opportunities available and taking systematic risk, right? So talking about the next slide, we have the credit scores. Credit score is quite important thing, and building credit score.
So, credit score is a, numerical representation of individuals' credit worthiness. So, to identify credit worthiness of an individual like you and me, banks or any persons has to see their credit score. As I've mentioned, it is primarily used by lenders to assess the risk associated with lending money to a particular person. So the higher the credit score, the lower the perceived risk to the other person, and plus there are more likely chances of an individual to obtain a loan on a favorable terms that are more favorable to, like lower interest rate or more favorable terms. So here are some tips that in that way you can improve your credit scores. First of all, you must be paying your EMIs full and on time also. Plus, make sure you use your credit card regularly. Plus, don't get close to your credit limits that bank has issued while issuing your credit card to you. So don't get close to that. It over And avoid applying multiple credit cards at once. you should have, either one or maximum two credit cards at once to so that you don't overall impact your credit score.
So I think everyone understand credit scores till now, right? Anyone have any query regarding the credit score? Credit score simply means, so suppose you are going for the taking loan, right? So one person can get the loan for 8% and you can get it for 7.5% if you have a better credit score. So it's always better to have a good credit score, and there are tips and tricks through how you can improve your credit score. Yes, Ashmita.
Is the credit score linked to the person or some bank account? Like if I have
It linked to
multiple
the
bank
person.
accounts?
It is
It
Okay.
linked to the person.
Yeah.
So how do different bank accounts, like how do banks know,
Actually,
like if they're
bank have all your detail. Once they have your PAN, they have your all all details of your transaction, whatever the big loans you have taken. If you paying your uh, credit card bills on time, all such things.
You can see all the things through various websites like Bank Bazaar or
You can also check
Expedia.
your credit score, right? Through
Expedia.
just as Aditya mentioned, through Bank Bazaar, Paytm, Expedia.
So there you can check, and what is hampering your credit score, you can also check from there, and you can improve your credit score through the things that have been, reducing your credit score. You can correct that in future. And
but then
Divyan,
my question was, who calculates the credit score? Like, is it the bank, some particular bank does it,
So
or is
there
it
are
linked to my PAN
credit
account or
agencies
whatever?
involved. There are credit agencies which calculate your credit score.
So in India, it is CIBIL, the CIBIL score. So that agency automatically have your all the data that is being collected through bank account or any other financial institution. So that agency collects your details through your PAN card and build a credit score from there based on various parameters.
Okay, got it. Thank you.
Okay, yes, Divyanshu.
Sir, like I have heard like paying a loan after time that reduces your credit score. But I have heard somewhere that if you pay your loan so early, like if you get some money from somewhere and you pay your loan so early, that also spoils your credit score. Is it true
So
or a
in
myth,
those
sir?
cases, if you pay your loan before time, generally bank charge penalty on you.
So I understand in this way that if you are, taking loan for 4 years and you'll be repaying it in 2 years, then bank will be having a lower interest income that they'll be getting in 4 years as compared to 2 years. Na? So they'll be charging a penal interest for that early repayment, and that penal is itself is a word that is showing that it will be hampering your credit score, right?
Okay, so thank you.
Okay, yes, Priya.
So, like, I'm asking that is every bank anyone who is having a bank account is eligible for the credit score, or only the person who is having a credit card is eligible for the credit score?
So it's not just about credit card. You can always check your credit score. So credit history gets maintained. The earlier you open your bank account, the earlier you enter into any sort of financial transaction, be it opening bank account, be it taking credit card, be it taking loan. So any kind of transaction, financial transaction you take, it starts building your credit score.
Just remember in a way that if in any way where you are dealing with bank, it is hampering and creating your credit score.
It is either increasing or decreasing your credit score, right?
Okay, sir.
Okay. I think we should continue. Then we have the demat account. So demat accounts is nothing but is a short form of dematerialized account. Dematerialized account is like it hold your shares and securities in digital form. So for example, if you want to invest in Reliance Limited, so how you can invest? First, you have to have a demat account there. So there are multiple stock brokers. You must have heard about Grow, Zerodha, Angel Investor. So these are kind of stock broker from where you can open your demat account to invest in the shares, mutual funds, right? So in order to invest in stock market of India, you need to have a demat account, only through which you can invest in shares. And right now opening demat account is quite simple. Only 3-4 documents are required. First one is your PAN card, then your proof of address, then your photograph and signature on white paper. That's it. These are the 4 documents that are only required to open a Demat account. Without Demat account, you won't be able to invest in stocks or mutual funds. Right. And the steps involved in Demat account are, so these are two. First of all, there are only 6 steps involved. First of all, you need to have a reliable brokerage firm. So Zerodha is the biggest one. Personally, I only have Demat account with Zerodha only.
Yeah, me too.
So Zerodha is the biggest one and the most reliable one, I would say. Then you need to visit their official site and apply for it. You just need to fill the basic details, upload the required documents, then your bank details, and then you just need to complete the verification process. That too is done digitally through your e-Aadhaar. If your Aadhaar is linked with your phone number, you can digitally sign your application, and within few days you will get your Demat account and you can start funding your account to invest in securities. Securities, by securities we mean share, mutual funds, these kind of stuffs, right? Anyone have any query regarding Demat account or how to open it or what's the need of it? Anything?
So is it
Yes,
like
Siddharth.
if we say that, sorry, yeah, so that can go ahead.
Sir, what is KYC?
KYC is simply your know your customer or know your client. So KYC simply means providing few details about yourself. Right. In Demat account, you need to have perform the KYC. KYC simply means providing your details.
You must be having must have done a KYC for your bank account as well as Paytm na in earlier years or days. So it is same.
It simply means giving your details to the vendor. So for example, if Paytm is doing your KYC, you are giving the basic detail about yourself to the Paytm.
Right.
That's how they are knowing you. Right.
Yes, sir. Okay. Sir, before opening a Demat account, we have to provide a KYC.
Yeah, it is a ongoing process. So while if you do a KYC, then it will be some of the steps that you need to complete while opening a bank Demat account. It is not just कि आपको पहले देना पड़ेगा, then you will be able to open a.
I think it's just a half an hour process to open a Demat account. Only PAN card is the biggest one. If you need to have a PAN card and Aadhaar card, you can easily open your Demat account.
Yeah.
So, sir, KYC is for every account. There will be different KYC. For if I open an account, Demat account with like for in HDFC, so I have to fill.
Yeah. So if you open a Demat account with Zerodha, you need to perform the KYC. If you open it with Grow, you need to again have to perform the steps. Again, need to
wherever a company changes, then you need to do it again, na?
Again and
because
again.
they will not be having your
So
details.
it is not a central thing. We have
No, it's not central thing. There are multiple stock broker in India. I think there are 200, 301, but the major ones are Zerodha, Grow, Angel Investor. Few banks are also there. So yeah.
Okay.
Anyone else? Yes, Ashmita.
Yeah, so when we say that we need Demat account to like invest in shares, is it like I transfer money from my savings account to
Exactly.
the Demat account and then the Demat account is used for allocating
Exactly.
funds for different shares? Okay.
Exactly.
Yeah,
Right.
you need to upload.
So after Demat account, just a brief introduction about stock exchange. What is stock exchange? Stock exchange is nothing but a market. So you can link it with a vegetable market where all the vegetable gets sold. Similarly, stock exchange is where your stock gets exchanged, where you can purchase or sell your stock. Majorly, there are many stock exchanges in India, registered one, but the major one are Bombay Stock Exchange and National Stock Exchange. So, so simply stock exchange is nothing but just a market where you can purchase or sell your stock. Right. So biggest one are National Stock Exchange or Bombay Stock Exchange. In case of National Stock Exchange, you must have heard about Nifty or Sensex, right? Nifty increase, Nifty decrease, Sensex is down, Sensex has increased. This kind of stuff you must have heard. So Nifty is nothing but Nifty is an index of National Stock Exchange and Sensex is the index of Bombay Stock Exchange. And how Nifty is calculated? Nifty is calculated by considering the top movement of top 50 companies registered under National Stock Exchange based on the market capitalization. So, for example, if a company is there, uh, it is covered under top 50 companies based on market capitalization. By market capitalization, what I mean is the number of shares into the share price. So there are thousands of companies registered under National Stock Exchange or Bombay Stock Exchange, and whatever the top 50 company based on the market capitalization, based on the amount they are having. These are the top 51. The movement of top 50 companies Nifty. Similarly, in case of Bombay Stock Exchange, the movement of top 30 largest stock companies is Sensex. Right? It is nothing. Nifty or Sensex is nothing but a stock market index, which get its power from the top 50 company in case of Nifty, top 30 company in case of Sensex. Right. So once you get your Demat account, you can deal in National Stock Exchange as well, in Bombay Stock Exchange as well. These are the top players, top stock exchange in India. There are multiple stock exchange as well, but according to the volume, according to the volume of the sale and purchase transaction, these two are the biggest one. I think we are good with the stock exchange. Anyone have any query? Yes, Siddharth. Siddharth, do you have any query?
No, sir, it was by mistake.
Okay. So I think we should continue. After stock exchange, we have considered few investment opportunity available as well.
I think so. There are various investment opportunities that are available to individuals based on their risk appetite and financial goals. So briefly we have mentioned. So these are some of the investments classification that an individual can invest in. So first is equities or you stocks. So you can invest in public listed companies like Reliance or Tata. In the shares of those companies, you can invest in publicly. Only public companies are listed. Publicly or private and privately are private companies are not listed. So next is mutual funds and ETF and index funds. So mutual fund is basically a pool of funds that is being collected from various investors, and that pool of funds is invested by professionals like CA and CFAs in various companies. So in these ways you get to reduce your risk, overall risk, and also get a benefit of diversifications. So next is bonds. In India, bond market is not much developed, so you can invest in bond as well. So bond is just a investor giving loan to an entity. The way we take a loan from bank, so we can also give a loan to entities. So that thing called a bond. So generally it is a lower risk as compared to equities because you get a fixed interest from the companies. And next is real estate. So you can also invest in physical properties, residential, commercial, or land. So you may be having a question that you will be requiring a heavy chunk of funds while investing in properties. But there are India has introduced various funds or REITs, real estate investment trust, through which you can invest as small as amount of 500 to as per your profile. You can invest in that funds, and that fund will be investing in residential or commercial properties, and from there they'll be earning rental income, and you'll be getting a rental income from there. So you can invest in real estate through real REITs or other investment trusts. Next is commodities. You can also invest in gold, silver, and crude oil, or any other commodities through MCX. To beat inflation, as we come across that gold is now more costlier. So to hedge that cost inflation thing, you can buy a gold through stock exchange. Next is cash and cash equivalent. Cash and cash equivalent is basically a liquid assets. Liquid assets here, I mean that if you have any bank account, then you'll be able to take that funds from that bank account within 1 or 2 days. So if you are able to take out funds from any of the investment in generally 3 months, then that thing is called cash and cash equivalents. So it offers a liquidity plus stability, and but there is one disadvantage that it is a there are lower returns as compared to other classification that I've talked about. So any questions up in these investment opportunity slide so that I can continue else.
Anyone regarding any confusion related to stocks, mutual funds?
I think we can continue, right? So next is insurance. So insurance in India, insurance is divided into two things. First is life insurance and another is health insurance. So we'll be covering here life insurance. So life insurance is further divided into two types of life insurance: whole life insurance and term life insurance. So whole life insurance offers a guaranteed death benefit for your entire lifetime period. But whereas term life insurance, as by its name also, it is beneficial only if if the insurer dies within that certain time frame that they have taken while taking term life insurance. Let's say they have taken 70 years, 60 or 80 years. So details of term insurance, that prerequisites of term insurance would be, so they pay premium until you die, else your policy will lapse. And in India, average life expectancy is about 70 years. So ideally, you should take policy up to 70 years. Otherwise, your premium will shoot up. And so that you should for a conservative thing, you should take between 60 to 70 years. Any number between that should be ideal, right? Also, one more thing I just need to mention, that you should take your insurance policy in earlier age, because you don't have responsibility, and bank or insurance company will assess based on different parameters that you don't have the risk to pay the insurance premium. Accordingly, your insurance premium will be lower in earlier years. Like let's say you have 20 or 21 years now, so you'll be having less premium as compared to an insurance you take in 30 years, because you will be having responsibility of family or other things. So you'll have a higher premium. So next is, what is a rider in insurance? So rider is nothing but an addendum to an insurance, that addendum to insurance policy that adds additional coverages. So rider typically comes at a cost, and rider cannot be bought or added after base policy is bought. So and buying a rider is more beneficial as compared to separate insurance policy. So rider example I would take is, let's say you would take a term insurance and you mention that I die because of this thing like cancer or this thing, but you die because of COVID. So you'll not be allowed to claim a benefit of term life insurance, because you are not, you have your death is not incurred as per the terms that the policy says about. So in that case, you can take a rider of COVID, that in case my death happens because of COVID, then I would be allowed to have a benefit. So that way rider helps in our policy, no?
So guys, this is the small briefing about the insurance, and
I think so.
And I think mainly you, as an individual, you got to have term insurance and health insurance as well. It is a best investment you can make, and as young as possible, because if you take it as young as possible, your premium would be less.
Right.
Anyone else? Any query till now? I think we have covered all these topics, all these slides.
Any questions?
Any question about any part, be it taxation, be it finance, be it investing?
Ashmita, right? Hi, Ashmita.
Yeah, so like when we say about investing in stocks and all, is is there some limitation on the time that if I've invested some money and if I have an emergency and I want to get that money, uh, like I want to take out some money
So
from the share.
Ashmita,
So
is
is
in
there a
that case,
time?
so for example, if for example you have got your some you have some disposable income, and you invested it in some stock, and now you need it your for due to some emergency, then you need to sell those stock.
Well, so to answer your query, you might have difficulty in selling the stocks now, because that stock might not have liquidity in the markets. So that way, buying a stock will not be much beneficial as
So
compared
it's
to
always
liquidity.
better to have emergency fund as well. Typically in finance, finance wisdom, we say you must have at least 6 months of your salary into 6 months fund as your emergency fund, which is invested in some liquidable asset. And then the remaining amount you can invest as long term, for long term basis, either in stocks, in mutual funds, in index funds, etc.
Okay, so we can't just easily sell our shares or investments. It takes
Now
time to.
it depends on the volume, but it's not like you want to sell the stock on Monday and you won't be able to sell it till Saturday or Friday. You can sell it, but again you need to sell it maybe in on loss as well. It depends on the stock movement as well.
So you might not be having a gain now.
So for example, you purchase the stock for 100 rupees, and now suddenly you get the need to sell the stock, and now currently it is trading for 80 rupees. Then you need to sell it for loss.
Right. But I can do that. I can sell it on a loss and I can get that money, but it will be less than what I have invested.
Right. It will be less than the original amount.
Okay.
In India, there is a T+1 settlement. So today, if you sell, you will be getting a funds in your bank account
in the
day
next
after
day.
tomorrow. No?
Okay. Right.
Yes, Bhargav.
Sharat Kumar has a doubt. That is the tax applicable for properties like land, which was bought or inherited? If it's applicable, in which pattern?
Yes, taxation on land is applicable. So if you have inherited the land from your forefathers, from your ancestor, it will be taxed when you sell it. Inflation. So the cost will be the cost which on which your great grandfathers have purchased, adjusted with inflation, and the sales amount will be the amount that you have sold. So the difference between the two will be your gain, and it will be taxed accordingly. Yes, Bhargav.
Thank
you. Okay.
Thank you, sir.
Anyone else?
Also, there was yes, sir. Also, there was another doubt of a person. I have thought of a plan to reduce my tax liability by using my parents' tax exemption slab after they retire, but I'm not sure of the validity of the method and would like a review. So after a few years, I plan to earn through multiple streams of income, including freelance and consultancy work. For the same, if I do it as an individual, I'll be liable to pay 30% tax, given that my salary from primary job will cross the 30% tax threshold. But is it a valid strategy to employ an alternate routes through?
So Bhargav, in typically speaking in India, we are not allowed, if you are under a employment contract, generally employer don't allow you to freelance work as well. So it's doesn't come under the contract, and they specifically exclude you or disallow you from taking freelancing contract as well. But however, if you anyway earn some income from freelancing as well, then it will be taxed there as your income from business profession, right?
Okay, so thanks. So I would like to conclude, sir. Thank you, Ayush and Aditya, sir. The insights and the knowledge provided by this session did help us in understanding the fundamental concepts behind the tax laws, the Indian tax regime, investment, and the stock markets. Also, I would like to thank upon all the participants attending this session. The active participation they have shown helped in making the session much more interactive and informative. Please stay connected with FEBS and follow us on all the social media platforms for more insightful sessions and events. And on the behalf of entire organizing team, thank you once again for being the part of cracking the code, breaking the enigma of income tax laws.
Great. Thank you, Bhargav. We are also very thankful to you. It was a great session. I find it really really, interesting, and it was a two-way communication.